Homegrown Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monaco.
Hello and welcome to Wednesday here at Ausbiz. You're watching The Global View. I'm Andrew Gagan. Good to have you with us here at Ausbiz. Let's take a look at what happened overnight. Equity markets mostly in the red as investors looked past politics and focused on earnings and economic data. On Wall Street, the major indices gave up early gains to end marginally lower as investors considered the latest quarterly reports from the first of the mega cap tech stocks. However, the Russell 2000 outperformed the broader market as that rotation in the small caps resumed. Alphabet shares, they were little changed in the aftermarket as it beat second quarter revenue estimates driven by a rise in digital advertising sales. Net income in the quarter rising more than 28%, while revenue from its cloud computing services grew by a similar amount. Tesla revealed its lowest quarterly margin in more than 5 years, sending its shares down around 4% in after-hours trade. It booked a gross margin excluding regulatory credits of just over 14%, with price cuts continuing to hurt its bottom line while the company intensifies its self-driving technology efforts. Visa's third quarter revenue growth fell short of expectations as steep borrowing costs limited consumer spending, sending its shares down around 2% in extended trade. Shares in parcel service UPS collapsed as it cut its 2024 operating margin target as new e-commerce customers flooded its network with slower, lower profit shipments. General Motors shares slipped after it indefinitely delayed its planned self-driving vehicle, while its second quarter profit and revenue beat estimates while increasing its annual profit forecast. Well, US Treasury yields eased in response to weak housing data in the US, with existing home sales falling 5.4% in June to the lowest amount since December. And a non-manufacturing index fell sharply to its lowest level since 2020, while the Richmond Fed Manufacturing Index fell to negative 17, with declines in most components, including prices paid and received, orders and employment. The yield on the 10-year Treasury note was at 4.24%, and an auction of $69 billion in 2-year notes saw strong demand, the yield declining just over 3 basis points to 4.48%. Meanwhile, a Reuters poll of 100 economists forecasts the Fed will cut interest rates twice this year, in September and December, as resilient US consumer demand warrants a cautious approach, they say. Well, the US dollar firmed slightly overnight, with the Aussie weakening to 66.1 US cents. All right, let's get across all those market moves. Brad Gastwirth joining us from Unearthing Opportunities. Brad, very good to catch up with you again. Of course, we're now seeing some of those bigger companies start to report. The headlines, of course, from overnight, both Alphabet and Tesla. What were your takeouts?
Yeah, so let's start with Alphabet. I mean, the revenue number was absolutely massive. They had a huge revenue beat. They beat on the bottom line. The overall numbers look pretty solid. I mean, it's hard to really, take away anything negative from that report. You could maybe argue that expectations got incredibly lofty and they didn't reach that heightened, the most heightened expectation. That being said, the numbers were really stellar, looked good across the board. Moving on to Tesla, it's a little bit of a different story. We had some pretty horrific numbers in terms of what people were looking for. In terms of commentary, there's certainly more pressure coming from China. Pricing is a very important factor here. I mean, that stock took it on the chin a little bit in the aftermarket post that commentary. And, the numbers weren't good. And I think you hit it on the head. I think the margins were the lowest that I've seen in quite some time. So the net is, prices go down, that hurts profitability. It's something that we've been talking about for some time, especially on this program. And in terms of the stock, I'm still not a buyer of Tesla here. I think you can still see that stock come down. In terms of Alphabet, I do like buying Alphabet and would take advantage of any weakness.
Yeah, a little more news with Alphabet as well, in that its attempted acquisition of the cybersecurity firm Wiz appears to have fallen over.
Yeah, Andrew, and that's a really good point. And the other thing too that a lot of people are talking about is they also tried to acquire HubSpot. So we've had two very massive potential acquisitions that Google's walking or Alphabet's walking away from, and that it makes some sense. I mean, on the regulatory side, I think a lot of investors and I think a lot of government officials were watching this in terms of would this ever get approved? And I think from the investor standpoint, I think a lot of people were quite hesitant and didn't believe that that would take place. And, Google, I think, didn't want to pay an exit fee if they went ahead and made that, acquisition target. They would have to pay a breakup fee if it did indeed get broken up. So I'm not surprised by it. I think investors overall are not that surprised. I think both assets would have been great for Alphabet's portfolio. That being said, I really didn't see them getting done.
Brad, when you look ahead, which results are you most looking forward to, perhaps with the view to an outperformance?
Yeah, I mean, I think you're going to see these AI-related stocks continue to perform quite well. I mean, the question becomes, compared to last year results or compared to some of these lofty expectations. I think in Microsoft, I think in NVIDIA, which is a little bit of an off quarter, I think you're going to see continued good things for the quarters to come. I think you'll have a little bit of a reshape back with like a Salesforce.com where, lofty expectations, it took a little bit down. I think you'll see that recover quite nicely. And then Adobe as well. I think you're going to see very strong numbers. So I think for majority of them, I think you'll see on Apple likely decent numbers and probably good iPhone units. I'm still more concerned on that stock for several reasons, but mostly because of the China exposure. But ultimately, I do expect good year-over-year performance from the AI-related group. I think we already saw that with the Alphabet numbers. They did talk about that performing quite well. That's going to continue. The biggest question is on a year-over-year basis, these numbers are going to look quite stellar, but will they be enough on the lofty expectations? If they're not, they're just buying opportunities on weakness.
Brad, just with a view to Microsoft, of course, we had that massive global IT outage on Friday, which can be rooted back to that software update from CrowdStrike. Were there any residual effects, particularly for Microsoft, do you think?
No, I mean, so yeah, Andrew, you're absolutely right. And this took, got a lot of attention here in the U.S. clearly with the CrowdStrike news. In terms of like a derivative effect for Microsoft, I'm not that concerned at all for any ramifications for that company. And then we've seen some major data breaches too recently, even another one with AT&T. We've heard some other things that could cause red flags. That being said, I think on a Microsoft specifically, Andrew, I mean, they're doing so many great things. And on the AI front, they are certainly a leader. The revenue that they get, that increase in revenue for their AI suite is almost all margin. This is going to continue to have solid profitability and solid numbers. So I would look at Microsoft as it's one of the long-term winners in the AI race, and weakness is a good buying opportunity if it did fall on any of these rumors or speculation.
Brad, there is so much to watch stateside at the moment, not the least, of course, politics, how that's playing out with the dramatic moves there, of course, with Joe Biden having quit the race. How is that? And also, let's not forget the forthcoming rate cuts from the Fed. How is that determining your investment outlook at the moment?
Yeah, and good questions here, Andrew. I mean, let's maybe tackle the Biden dropping out first. In terms of what's happening on the political front here in the United States, I would say that if the week before Joe Biden did announce that he was dropping out, I think the expectation was Trump was going to win this election. I think you had that pretty much on unanimously from investors' point of view. And we're speaking purely from an investor point of view. I think there's still a significant, portion of investors that still believe that there's not even a race, that Trump will continue will win this next election. You do have a little bit more of a fight now, but I think that's basically priced in that Trump is going to win. Now, in terms of how do we sort of play this, Trump has a good message for Americans. I mean, he definitely wants to bring things back here, bring more jobs, help out this economy. Many could argue that the execution or the way around it is quite aggressive, and that's where some of the Democrats certainly get disappointed and frustrated with. I think ultimately he wants to do what's right for this country in terms of helping the market. I think he'll do things that will be beneficial. I think there's going to be wild cards that will have to be adaptive. But ultimately, I still see a lot of tailwinds for the markets in the next 12 to 36 months. This AI related, upgrade, if you will, lack of better words. AI is going to continue to make headlines. You're going to continue to see efficiency across companies. And this is just good for profitability. So the companies spending money for it now are going to reap the benefits in the future. This tailwinds, it reminds me of the .com, and we're not at the end of that cycle yet.
Of course, part of that Trump trade that we have seen, certainly prior to Joe Biden dropping out, saw Bitcoin do very well. The focus, though, on crypto at the moment is that approval of the Ether spot ETF.
Yeah, that's a great point there, Andrew. I mean, the Ether has definitely gotten a lot of attention. I mean, the Bitcoin has been one of those trades as well. I mean, when you get these new ETFs, they bring some more excitement into the marketplace. I'm still not, I think it makes sense to have some small portion of assets in cryptocurrencies. I'm not chasing Bitcoin at these levels. I think you could see better opportunities to invest in that asset. But ultimately, I think you're right, though. I mean, when you have a new ETF coming in the market that's still in its beginning days, if you will, it gets excitement and you get more money coming in. And I think when originally the Bitcoin ETF came, there was like 15 billion in like one day that was going towards it. So I mean, you're going to see money to move in. That's going to bring excitement, but I think they'll get faded. I'm not buying that short-term trade.
Yeah, I'm assuming then you're still preferring those precious metals.
I still prefer gold and silver. Yes, you are right, Andrew. But the difference with the crypto and what's happening there with these news, there's a trade there on the crypto. I don't like doing those short-term trades. I think you make real money by investing in long-term trends. On the gold and silver side, I still see great fundamentals, and even in all these environments, there's still a great hedge. So both assets have done very well over the last several years. Every time they've sort of taken a little spook from the market, they've rallied right back. I'm still a believer in precious metals and gold and silver.
Brad, great to get your outlook. Thanks for joining us from Unearthing Opportunities.
Thanks, Andrew.
Let's take a quick look at where we're likely to get going on the local market on this Wednesday morning. As you can see, SPY futures are positive, and we will be watching that market open in just a couple of minutes' time. Stay with us for that.